Okay, you can start, sir.
Okay, thank you. And let me just share my screen. You'll tell me if you can see the presentation. Okay, is it appearing? Is the screen showing on your side?
Yes, sir.
Okay, let me just change the template. Okay, so our focus for today will be ordinary share capital and retained income. Ordinary share capital and retained income. Okay, just to provide you with some background information. Now, if you remember, we have different types of companies, or we have different forms of ownership, but I just want us to focus on public companies in particular. Now, what the public companies would do is that they would issue shares to the public. They would be listed companies at JSE, meaning that since they are listed companies, they are allowed to issue their ordinary shares to the public, meaning that people like you and I can be able to access them. So what they will do is that in order to raise shares, they would try, in order to raise finance or to finance themselves, they would sell shares to the public. So when that happens, it means that whoever would have bought those shares would automatically become a shareholder, meaning that they will be included in the share register. So remember, any shareholder is entitled to dividends, meaning that uh, at some point in time they will have to receive dividends. So without waste of time, let me start with these minor concepts that you just have to know. The first one, the authorized shares or authorized shares. You can either use the Z or the S. Authorized shares. So when we talk about the authorized shares, we are talking about the maximum number of shares a company is registered to issue. This means that a company it must not issue shares that exceed the authorized shares. So authorized shares are maximum number of shares, maximum number of shares a company is registered to issue to the public. Now, for example, let's say we are told that the authorized shares are how much? 1 million shares. So the shares that we must issue, they should always, it's either they are the same as this or they are less. So either they are the same, equal, or they are less than the authorized shares, but they must never exceed the they must never exceed the authorized shares. Okay, then again, because we'll be having shareholders. Now, these shareholders, they'll be entitled to dividends. Remember, dividends, these are, we can say, some form of return of investment. Remember, shareholders, they're investing in shares. So in return, they receive dividends. So we can say it is the portion of the profit shared to shareholders. So we are going to have dividends. which are portion of profits, after paying tax, profits distributed or shared to shareholders. Now we have two types of dividends. Firstly, we have the interim dividends. Now, when we talk about interim dividends, we are talking about paid dividends. These are the dividends that are declared and paid for during the financial year. So these ones, they are paid during the financial year. During the financial year. Then we also have what we call final dividends. Now, final dividends, these are just recommended dividends, means that we are just saying from the profits that we have made this year, we are allocating a certain number of cents towards final dividends. However, these final dividends, they are not paid for during the year. It means that they are just declaring and making a promise that in the next financial year, they will pay them. So final dividends are dividends declared. Dividends declared and will be paid in the next financial year, will be paid in the next financial year. So meaning that every time when you see final dividends, you have to see what are shareholders dividend. Shareholders for dividends. The question is, what is shareholders for dividends? Now, shareholders for dividends, it is a liability account that is used to record final dividends. So we can say it is a liability account used to record final dividends. Okay. So when you see final dividends, you have to see shareholders for dividends. So this means that final dividends for this year will be the shareholders for dividends at the end of the year. So final dividends for this year will be the same as the shareholders for dividends balance at the end of the year. I hope it makes sense.
Yes, sir.
So is the question so far?
Sorry, you cut off there, sir.
I'm saying, is there any question so far?
No, sir.
Okay, because now I'm introducing the structure of the nodes since you're with nodes. Okay, so let's say we have ordinary share capital here. This is the node, so we can say number 7, ordinary share capital. Then we would have authorized shares. They will give you a specific number there. Then we will have a column like this. So here you write the shares. Then here you write the value of those shares, amount, rent. So just to remind you, the ordinary share capital node, we are using it so that we can present the movement of our shares. So firstly, we'll start with shares in issue at the beginning, or you can just say balance at the beginning. So balance at the beginning, it represents the number of shares at the beginning and also the amount, the value of those shares. Then let's say, for example, we are told that they are issuing shares. Let's give an example, e.g., they are issuing, let's say they are issuing, let's say they are issuing 10,000 shares at share issue price, share issue price, share issue price of Rand per share. So you have to note that share issue price, it is the price that we are selling each share. So it means that if we are selling one share, we're going to sell it for 5 Rand. So in this case, we are told that they are issuing 10,000 shares and each share they are issuing it at 5 Rand. So when we record this in our ordinary share capital note on the shares column, we'll say 10,000 shares. Then here in the middle column, you just tell us what is happening. You can say additional shares. Now you are telling us that we are issuing additional shares at which price? 5 Rand share issue price. So now we want to know the total value of those 10,000 shares. So to find the total value, you will say 10,000, then you multiply it by 5 Rand. So it gives you 20,000. No, not 20,000. It gives you 50,000. It gives you 50,000 rands. Then you need the 50,000 rands, you record it here. That is how we record issued shares. Okay. Then now, let's go to a situation whereby we are told that shares are being repurchased. So let's look at example number 2. So this time around, we'll say repurchased shares, repurchased shares, let's say repurchased 5,000 shares, 5,000 shares at 5,000 shares at 2 Rand, then from there 250. Okay, then we're told that the average share price is, let's say it's 2 Rand. So okay, now you have to note that a shareholder, when we repurchase these shares from him or her, they will decide to sell it to us at a price that is more than the average share price. So hence you can see that here we are told that the share purchase price is 2 Rand 50 per share, but we are told that the average share price is 2 Rand. So this is because a shareholder will never sell shares back to us at the share issue price or at the exact same price as the average share price. Reason being, they want to profit from selling shares back to us. So what we'd have to do is that we'd have to determine the average share price. Then that will serve as a base for determining how the shares will be purchased. So what I would normally do is that I'll just draw structure here. The RP, it represents the repurchase price, so which is the total amount that we are going to pay. In our case, it will be the 2 Rand 50. So the total amount that we are going to pay is 2 Rand 50 for each share. But the question is, how are we going to finance the 2 Rand 50? Where are we going to take the funds to pay for that 2 Rand 50? So we're going to look at two sources. Firstly, we're going to use the money from the ordinary share capital. So we have what we call the average price here. So this one is for the ordinary share capital SC. So in our case, it will be the R2 here. Then we know that we cannot rely on them from ordinary share capital. We'll also have to take money from the retained income. So with what I call price difference here. Price difference, it is the price above the average share price. So in this case, to find the price difference, what I call PD, you will take the R2.50, then you will subtract the R2 sovereign with 50 cent. Now this 50 cent, for us to finance it, we're going to use it from the price difference we are going to take from the retained income. So using this structure, uh, you will have an idea of which amount are you going to use to pay this share. So check here. I said that the trend, which is the average price, is the one that we'll use to price our repurchased shares inside the ordinary share capitals. Now, inside our ordinary share capital, we are going to say 5,000 shares. Remember, they are being repurchased. So repurchase of shares, you must have brackets. Then after the note here, you say repurchased of shares or repurchased shares, whichever way, then you see it. Now listen carefully. Inside our ordinary share capital, we repurchase our shares at the average share price. Now, how much is our average share price? Is R2, the that we've just told the average price is R2. So we're going to R2 here. Then it would be 5,000 multiplied by R2, which is 10,000. Then in here with the amount, you will put it in brackets, you see. Then that is how the structure of the ordinary share capital. Then at the end, you will have a balance at the end. You'll have balance at the end, of which you will say shares issued at the beginning or balance at the beginning. Then you add additional shares and you subtract the purchase shares. Then you'll get certain number of shares here. Then you'll get certain number, the value of those shares. So now a question that can come into your mind is, what if maybe I'm not given the average share price? How am I going to calculate it? So in the next, let's show you how you can easily calculate the average share price. So to calculate average share price, you are going to say, here you put the value. So the formula says shares, all shares, the value of the shares issued before the repurchase, issued before the repurchase, issued before the repurchase. Then you divide it by number of shares issued before the repurchase. So let me give you two scenarios here to see what I mean when I say this is how we calculate average share price. Okay, let's look at scenario one here. Let's say maybe we're told that ordinary share capital, it has how many shares? It has 100,000 shares. Then the total value is say it's 200,000. Okay, then we are told that these are the transactions. You can now pay attention, but now because this is very important. So firstly, let's say they issued additional shares. They issued additional shares. issued additional shares at how many shares? Say they issued additional shares. They issued additional, okay, let's say 50,000 shares at 50,000 shares at share price of we can say rand per share. Okay, then secondly, we are told they purchased shares. They purchased shares at they repurchased, let's say, 20,000 shares. 20,000 shares at 400 per share. Okay, then now we are being required to calculate the average share price. Remember the formula of calculating the average share price. It is shares issued before the repurchase. So if you check here, since the year start, we have 100,000 shares. These are shares that were issued in the past, and the value is 200,000. And we are also having another transaction says 2,000 shares were issued at that time. After that, we can see that shares were repurchased at 20,000. Now, if you check this one, shares that were issued before the repurchase, we're talking about the shares at the beginning and additional shares. So this is how you are going to calculate average share. So we're going to say average share price. Average share price. So we start with the value. So firstly, ordinary share capital that represents the number of shares that were issued from long time ago. The total value is 200,000. Then we have to add with additional shares that came before the repurchase, not after. Remember the additional shares that came before the repurchase. So if you check, we have issued shares that were 50,000 and they were issued at 3 rand per share. So if you take 5,000 shares, then multiply it by 3 rand, gives you 150,000. So means here going to have 150,000 rand. Okay, then after you're going to divide by the number of shares. So when the year started, a number of shares that have been issued already is 100,000. Then you're going to add it with additional 50,000 shares. Then gives you how much? So 200,000 plus 50, it gives you 350,000. Then 100,000 plus 50,000, it gives you 150,000. So if you take 50,000 and you divide it by 150,000, it gives you how much?
Sorry, so can I just calculate quickly?
Yeah, calculate. I think it will be 310, 310 cents, if I'm mistaken.
So is that 350,000 divided by
Yeah,
150,000?
350. Yes.
I'm getting 2.33.
Point
2.33.
20.
Yes, sir.
Okay, means I miscalculated. So 2.30. Okay. Yeah, makes sense now. 2.33. So 2.3 would be our RH shifts. Okay, so that is for scenario number one. Now let's look at scenario number two. So let's assume even now we have ordinary capital. Ordinary capital. We are told that since the company started, 500,000 shares have been issued. Then these shares they are valued at 2 million. Okay. Then this time around, our transactions are first. Okay, so first, we are told that transaction that transpires first is that shares are repurchased. They repurchased 100,000 at 7 rand per share. 7 rand per share. 7 rand is too much. Let's say at 6 rand a share. Then after that, we are told that they issued 100,000 shares. 100,000 shares. The issue price of 10 a share. Okay, now if you look at scenario number 2, we are told that there were 500,000 shares in issue at the beginning of the year that were valued at 2 million. And we are told there were shares that repurchased. So they repurchased 1,000 shares at 6 per share. After that, they issued what? They issued 300,000 shares at 10 per share. So if you remember our formula is that to calculate the average share price, you have to consider all issued shares before the repurchase. So if we check here, we have shares that have already been issued from previous financial years, which amounts to 500,000. And after that, we are having purchase. And after that, we are having issued shares. The question is, how are we going to calculate our average share price since there are shares that are issued after the repurchase? So the answer is simple. You follow the formula. You only consider the shares that came before the repurchase. So meaning that whether the issued comes after the repurchase, as long as there are other shares that came before the repurchase, we use them. So in this case, which shares came before the repurchase? The one at the beginning of the year. So I hope this one makes sense. So to calculate the average price, we'll say average price of say a total of 200, not 200, but 2 million rands. This represents the value of all shares that have been issued before we can repurchase shares. So we're going to divide it by the number of shares that have been issued before we can purchase shares. If we take 2 million and divide it by 500,000 shares, it gives how much?
I'm calculating 4 rand.
Yeah, then it means that rand is the ratio. So using this scenario, I want to show you that this is how we calculate the average share price on 2 instances. The first one, we have shares in issue at the beginning of the year. Then we issue additional shares during the year. Then after that, we repurchase the shares. So as long as you follow the formula, you only consider all issued shares before the repurchase. So is there anything that you don't understand in terms of this one?
No, sir.
You know how to calculate the average share price?
Yes, sir.
Really?
Yes, sir.
Can you calculate it if I give you a transaction?
Yes, sir.
Okay, so if that's the case, then let's go to an actual question paper, because here I wanted to show you some basics before we can look at activities. Okay, can you see the screen now?
Yes, sir.
Okay, so I need you to look at this information here. I need you to use this. Let me just see. I need you to use this 5,600,000. This 5,600,000 and this to prove that the average price 50 is 756. Can you do that? Hello? Can you hear
Yes,
me?
sir.
Okay, yeah. Can you prove that the
Yes,
average
sorry.
share price? Yeah, yeah. Can you try to prove that the average share price is indeed 756?
Yes, sir.
Okay. Are you done?
Almost done, sir.
Okay.
Okay. So I'm done.
You are done.
Yes, sir.
Okay. Can you explain the steps to me?
So we were given a balance of 5,600,000, and
Yes.
the issued capital of that was 800,000. Then on the 1st
Yes.
of October, there were additional shares issued for 9 rand 80 cents. So I
Yes.
multiplied that, and it gave me 1,960,000. Then shares
Correct.
repurchased at 10 rands, while the average share price was 700, yeah, 7 rands point 56 cents.
Yes. Yes.
To prove that, I took in all the above transactions. So I said 800, what? I said 5,600,000 plus
Yes.
1,960 over
It,
800,000 plus
mm,
200,000, which
mm.
in total gave me 5.6. Yeah,
Five,
7.5.
7.56. Very, very correct. Yeah.
Yes, sir.
Okay, thank you. Then let me look for scenario number two. Okay, scenario number two. That's scenario number two. You use 6,986,000. Then your issued shares would be 1,600,000 multiplied by 80%. And use that to calculate the next average share capital.
Yes, sir.
Okay.
So wait, so we were given, oh, we were given an authorized share capital.
Yes.
Okay, sir. Sorry, sir, you removed your screen.
Yeah. I'm in the content again. It's back.
Sure. Thank you.
You're welcome.
Okay, sir,
Yes.
I'm a bit confused, but can I explain what I did?
Yes. You can explain.
So they say here on the 1st of March, 80% of the shares have already been issued.
Yes.
So does that mean we have to calculate 80% to calculate the shares
Number
for
of shares. Yes,
right?
number of shares already issued. You have to calculate using the authorized share capital.
Okay, that gave me 1,280,000.
1,280,000, correct?
And then I think there was 300,000 shares repurchased
Yes.
at 465,000 more. I'm not sure if
No, don't worry about the if.
okay,
Just focus at
okay.
the value that will be paid.
So I calculated then obviously the I took 6,976,000 and divided it by 1,280,000, which gave me 5.45. Then I 5.45.
5.45. So this is the average share price, ne?
Yes, sir.
Yeah, so if you manage to calculate 5 rand 45, then you are fully correct. So in terms of calculating the average share price part, are you covered?
Yes, sir.
Yeah, so it is always calculated this way. They will either bring scenario number one or they will bring scenario number two, but As long as you know that to calculate the average share price, you consider all shares issued before the repurchase. That is the principle. Ne?
Yes, sir.
Okay, now let's look at this activity here. This activity here. So for you to be able to answer correct things or to write correct answers, you first have to understand the information that you are working with first. You can start answering the question itself. So you must fully comprehend the information, understand it first. So here they are telling us that the name of the company is Zolani Ltd. This means that Zola Ltd. It's a public company. It would be a listed company. Then we are told that the information relating to the financial year ended 30 June is when so the end of the financial year is 30 June 2023. Then we are told that you do the notes of the ordinary share capital and the retained income for the year ended 30 June. So this is what is required of us. But when we check the information here, we are told that this is the extract from the income statement on 30 June 2020. Now you start to ask yourself, why are they giving me information from the income statement? Remember, we are going to prepare the retained income. And when preparing the retained income, we must account for the net profit after tax. But in this case, we are given the net profit before tax of 810,000 and the income tax amount, which is 243,000. So we'll use this to calculate the net profit after tax. So NPAT, net profit after tax, that will be presented in the retained income note because we have to retain it for future growth and expansion. Then on information B, if you check here, we're given extract from the balance sheet and notes on on June 30. Then if you check here, we're given two columns, the one for 2022 and one for 2023. Now, all amounts appearing under the 2022 column, these are the balances at the beginning. Then these loans appearing under the 2023 column, these are the balances at the end. So this is how you start. You talk with the information before you can answer. Then we have shareholders for dividends. Now remember, when you see shareholders for dividends, you have to see final dividends. So this means that the 230,000, this represents the final dividends of the previous year and the year. Then the shareholders for dividends of 2023, it represents final dividends for the current year. Okay. Then we also have ordinary share capital. The one for 2023, it's missing, which is what we have to calculate. But for 2022, we are told 5,600,000 is the value of ordinary share capital. Then we are told that the retained income for 2022, it's 490,000. Am I still audible?
Yes, sir.
Okay. Then we go to letter C, which relates to the share capital itself. Then we are told that issued share capital consists of 800,000 ordinary shares. So this means that is the number of shares at the beginning of the year. Then bullet number 2, we are told that on the 1st of October 2022, how many shares? There were additional 100,000 shares issued at R8 per share. This is the share issue price. Then we are told that on the 1st of March 2023, 120 shares were repurchased rand per share. This is the price of the average share price, which is R7.56. Remember, inside the ordinary share capital, we record the average share price. It means that our repurchased shares will be priced at the average share price. Then inside the retained income will be priced at the price difference, which is the price above the average share price. Then we are told that on 30 June 2023, and balance consists of 180,000 ordinary. So these are the number of shares at the end of the year. These are the number of shares available in the share register at the end of the year. Then we go to information D. Information D, they are saying total gains for the year amounted to 540,000. Remember, total dividends, they mean interim plus final. So when we talk total dividends, we're talking about both interim and final dividends. Then furthermore, we are told that an interim dividend was paid on the 1st of December 2022, but we don't know the exact amount. Then we are told that a final dividend was declared on 30 June 2023. So now you to ask yourself, why are they not telling you the amount for the interim dividends and the final dividends? Then now you remember that on information B, we have shareholders for dividends, which is 290,000 for 2023. It represents the final dividends at the end of the year. I hope I'm clear on that one. Then now we can start answering the question. So we will start with the ordinary share capital note. So we have ordinary share capital note. We have authorized shares, which is 2 million shares. Now remember, authorized shares represent the maximum number of shares a company is registered to issue. We must never issue shares that exceed or that are more than our authorized shares. So now we go to share. We are given the amount 800,000 shares and the value, but the space here, it needs to be filled. What you are going to, you will say balance at the beginning, or you can say number of shares in issue at the beginning. So you will say balance at the beginning of the year. Then from there, we write the information. Remember, bullet number 1 says July 1, 2022, issue share capital consists of 800,000 ordinary shares. So we'll look at that in the bullet number 2. We are told that on 1st of October 2022, additional 200,000 shares were issued at 9 rand 80 cent per share. So here we'll see 200,000 shares, and on the notes we say additional shares. You write the share price, which is 9 rand 80 cent. You have confirmed 9 rand 80 cent, correct? So how much do you get when you take 200 cent and multiply it with 9 rand 80 cent?
So could you please repeat that?
How much do you get when you take 200,000 and multiply it by 9 rand 80 cent?
I got
Yes.
1,960,000.
1,960,000.
60,000.
960,000 like this, ne?
Yes, sir.
Okay, so now we go to another transaction. Here we are told that on the 31st of March 2023, 103,000 shares repurchased. So 10 rand shares. So here we don't the repurchase, but we want the average share price. So we're going to say under the capital, remember, when shares are repurchased, ordinary share capital will increase. So here we will say in brackets 120,000 shares that are repurchased. They're going to say repurchased shares at repurchased shares at the average price of 7 rand 56, if you remember it. 7 rand 56. There it is. I repeat, when shares are repurchased inside the ordinary share capital, you will price them at the average share price. Ne?
Yes, sir.
do not price them at any price that is not average share price. We only want the average share price. So when you take 120,000 and you multiply it by 756, how much do you get?
I got 907,200.
907,200. So this must be in brackets as well. Okay.
Yes, sir.
So right now, let's determine the number of shares in issue at the end. So to find that, we are going to say balance balance at the end of the year. So to find it, you say number of shares at the beginning, additional shares minus repurchased shares. So when you take 800,000, you add it with 200,000, it gives you 1 million. Then when you subtract 120,000, it gives you how much?
880,000.
880,000. Now, 880,000, it represents the number of shares in issue at the end of the year, or the number of shares available in the share register at the end of the year. So let's work out the value. Can you do the same? 5,600,000 plus 1,960,000 minus 907,200.
I got 6,653,000.
6,653,000. Thank you there. So far, is there any question or is there any challenge?
No, sir, not so far.
Okay, thank you. Then now we can go to the retained income. Now, according to the answer book, we are having balance at the beginning of the year, but we are not given it. They are not giving us, so we must for it. So go back to our information. Now, if you look at here, we have the item for retained income, which is 490,000. So this is the balance at the beginning of the year. So going to say retained income at the beginning of the year, 490,000 rand. Then after that, you're going to see we record net profit after tax. We do not want net profit before tax, but we want net profit after tax. So if you see yourself recording net profit before tax, just laugh at yourself before you can write the final answer. Yeah, because you are misleading yourself. Now, we're going to refer to information A. Information A, they give us two things. The net profit before tax of 810,000 and also the income tax. So we can use these two to calculate what? To calculate the net profit after tax. Now, just to take you back to the statement of comprehensive income. So if you are having net profit before tax, you will have income tax, which must be subtracted. Then you will have net profit after tax. Net profit after tax. Now, to get profit after tax, you take the net profit before tax, then you subtract tax. So net profit after tax, in other words, it is the net profit after subtracting the income tax. So you will say 810,000, then you subtract 243,000. How much does that give you?
I got 567,000.
567,000. So this is our net profit after tax. Then you come to the answer. You come to the answer book. Net profit after tax, it's 810,000. Then you subtract the income tax. How much was the income tax? It's 843,000 here. So we subtract. Is it 800? Not 800. It's 243,000 there. So you subtract 243,000 43,000. It gives how much? It gave you how much? Five something. How much was it?
567.
567. So this one you do not put it in brackets. No? Then after that, you are going to record the item of the repurchase of shares. So here, you're going to say repurchased shares. So remember last time I told you that when we repurchase shares, we'll pay them from two sources, from the ordinary share capital at the average share price and from the retained income at the price difference, which is the price above the average share price, the difference between the repurchase price and the average share price. So if you remember last time we repurchased how many shares? We repurchased 120,000 shares. We go back to scenario to verify. We repurchased 120,000 shares here. Ne? Then now what you have to do, you have to calculate the price difference, the one that you are going to use to price your repurchased shares inside the retained income. So firstly, you have the repurchase price of how much? Of 10 Rand share. Then that will be paid in two ways. The first one is from the average share price, the ordinary share capital. So which is how much? 756. So you say 7 Rand 56. Then now you'll remain with the price difference, the one that we use in the retained income. So to get it, you say total repurchase price of 10 Rand, then you subtract the average share price of 7 Rand 56. It gives you much?
2.44.
2.44, 2 Rand 44 cents. So it means 2 Rand 44 cents. It's our price difference. So you will come back to income. You'll say multiply by 2 Rand 44. It gives you how much? 120,000 shares multiplied by 2 Rand 44. It gives you how much?
292,800.
292,800. Then from there, put that in brackets. You see?
Yes, sir.
Then when you're done, we now present our dividends. So here you are going to say dividends on ordinary shares or dividends or ordinary share dividends. It doesn't matter how you write it, as long as you are telling that now I'm going to record dividends here. So I'm going to say ordinary share dividends, ordinary share dividends. Okay, so remember we have types of dividends. Ne? We have the interim dividends and also the final dividends. So this is how the structure of your retained income should always be. Then next up, we go to our information dividends. Now, if you remember later the first bullet, they told us that there are total dividends for the year which amounts to 514,000. Okay, so you're going to see 514,000 here in brackets. This represents both the interim and the final dividends. Okay, now if you remember earlier on, we're told that interim dividends are being paid. However, we do not know the exact amount of those dividends that were paid. But now we also know that a final dividend was declared. If you remember last time, I told you that If you see shares for dividends, you should see the final dividends for this year. No, this means that the share was for dividend of 2023 serves as final dividends for 2023. So it means I'll come back to my retained income and I will say final dividends, it's 230. You see? Then
Yes, sir.
now we have to calculate interim dividends. To calculate interim dividends, you take total dividend of 514,000, then you don't multiply, so it's not shares. Then subtract 230,000. You see? Then it
Yes, sir.
gives you how much?
284,000.
284,000. So this means that the interim dividends for the year is 284,000. So the next part, you have to calculate the balance at the end of the year. Now, to calculate the balance at the end of the year, you will see balance at the beginning, you add the net profit after tax, subtract the repurchase of shares, then you subtract ordinary share dividends. It gives you how much?
Sorry, I'm still calculating.
Okay.
I get 250,200.
200
250,200.
okay. 250,000, 200 pence. Okay, so this means that our balance at the end of the year of the retained income is 250,200. So next up, I told that we have to transfer the balances to the statement of financial position. So what you do, it's simple. You just get the answers at the end. So here they are saying the equity liabilities and the shareholder equity, it is made up of components equity, which is ordinary share capital and the retained income. So we have to take these answers from the ordinary share capital notes and the retained income. So when we look at ordinary capital note, the balance at the end of the year, it was 6,653,000. So that you recorded the ordinary share capital, 6,653,000. Then you also take the balance from the retained income of 250,000. 200 rands. Then now we have to find the total shareholders equity. So to find total shareholders equity, you take 6,653,000 and you did with 250,000. So it's how much? $9,6,900,000 something thousand. It gives you how much?
Wait, are we adding 6,653,000 with
Plus
250?
250,000.
Oh,
Yes,
okay.
yes.
I got 6,903,200.
6,000,000.
6,903,200.
900,200. Also, I
Yes.
left the 200 here. Thank you there. Let me just say 200. Okay, so that's how we prepare the ordinary share capital note in the retail. So, is there any question so far?
No, sir, not so far.
Okay, would feel like we should do activity or we here.
Pardon, sir?
Should we do another activity or should we end with the first activity? Then I give you activity number as your homework.
You can give me this activity as homework.
Okay. And I have to screenshot.
I just took a screenshot, sir.
Okay, then let's go to the answer book. Screenshot it as well.
I also took a screenshot, sir.
Okay, thank you. By the way, what was your name? I forgot it.
Oreneile.
Reneilwe.
Oreneile.
Oh, can you type it?
Okay.
Can you type it under the messages?
I sent it.
Okay, let me open the chats. Oh, or Reneile. Okay. My bad there. Okay. Or Reneile. Okay. Not bad. It's Tswana, ne?
Yes, sir.
Okay, no problem. Ornele, if there is no further question, I think I'll see you on Wednesday. So,
Sir,
how,
before we
yes,
go,
yes.
so I just spoke to one of the tutors and he said he's got his timetable messed up. So I wanted to ask if
Mm.
possible if we could move our sessions to Tuesdays and Thursdays because we don't have to have a lesson tomorrow now that we had one today.
Okay, no, you can talk with administrator, whatever he decides, I'm okay with it.
Yeah, so they said that you and I can have our lessons on Tuesdays and Thursdays, then I'll have my other lessons on Mondays and Wednesdays. I just want to make sure if it's okay with you.
Mm. No, means it's no problem.
All right. Thank you so much, sir.
Yeah, just contact with the administrator so that he can update me on the new schedule, ne?
Okay. Thank you, sir.
Yeah, I'm sure that you practice, ne? Because that's the only way you can master the subject.